All right, 3 p.m., our very last Saturday, 3 p.m. today, and we have come through 52 of these weekends. And every Saturday, 3 p.m., we're here to deliver what we know to you, prepare you for what's coming up, right? Now we have 3 more days to the year end. Is the world going to end on December 31st? Of course, things going to begin after December 31st, but we want to take care of what's in the 2024 properly. So today's webinar is really just focused on things that you can still rescue, you can still do, you should do within this 2024 years. All right, so let's get going. And what you are looking at right now, it is actually our website, right? That's our website. And on our website, you actually see our appointment button. This is where you can actually get online to book my time, book the other partner's time. The other partners has a 30 minutes exploration time, which is free, and you can book that, understand our firm, know what we can do for you, and we offer you a good resources here. And our YouTube channel is really the collection of all the webinars we did, like this one. It's gonna show up on our YouTube channel, and just make sure that you go ahead, subscribe to our YouTube channel. Every time when we do a new subject, you're gonna see it on your morning notification. Then if you have a 3 o'clock time open, you come to listen. If you don't, and you can always find us in our YouTube video library right here. You can actually type in what you are looking for right here, and then the video will pop up for you. Okay, with that, and let's get going with our today's topic. Year-end reminders for small business. Of course, our firm, we are literally the place where businesses are coming. And in reality, we don't really have any clients who don't have a business. Everyone here with us are with a business. And when you have your business, when you run your business, year-end, it is somewhat important. You know this is going to mark how much taxes you pay and what you can less pay if you plan properly. So it is really important timeline for every business. And of course, our firm, we are number people, and we have all of these numbers to show you: 12,000, 40, 27, 10, 6, 5, 3, 2, 1. And those are the numbers related to our experience and who we are. Like collectively we speak 10 different languages, and we have 6 branches around the country. And we also, we have 6 partners in our firm and 5 branches around the country. We actually are looking at establishing 2 more right now as I speak. I know I haven't really told anybody, but I'm working on it. And it is all necessary. It is all good. And I think we are just on our roadmap to grow, continue to grow, like the book I write, right? I wrote these 2 books. One is helping to start up a business. The second one is growing the business. The third one, 2 p.m., is expansion of your business. That's what Community CPA is doing. And I will write my experience in the 2 p.m. book. I will also combine my clients who are just so successful, becoming an inspiration for me. And so I bring them into the book and give that all to you so you can read or listen and then get an idea of what you can do. Of course, this is important. We always say that the webinar is so, anything on the internet is so easy, right? It didn't really have any compliance, didn't really have any scrutinies to qualify which webinar is qualified, which one is not and stuff. So it is a knowledge. We do our due diligence in our firm because our slides are reviewed. Our slides are created by our staff, and Catherine is one of the staff that does a lot of the generating of the materials. And then I, of course, review it before I talk to you, and the other partner does that too. So with those kind of procedures we have in place, and I would believe all of our webinars are high quality and giving you the real up-to-date information. But, if you check our webinars like, 3 years later, of course the content is going to be outdated. I do have, many years ago, I had one listener and actually posted to us that saying what we thought was wrong because that was not the case. Then I went back to look and realized that the time passed, the information we have there is expired, but the listener was in the new time zone, new time, so didn't realize that those videos were created much older. So make sure you check on the timestamp of the video, then you'll know how relevant they are, right? Now, number 1, BOI reporting. I don't have to tell you what is BOI reporting is, right? You know it already. You are a small business owner. You know that you're going to do something, and it's called BOI reporting. It's called the Corporation Transparency Act, and then want you to disclose who really owns the company. Remember that? And that reporting, remember the due date was, at the end of this year, and then a went banana and whatever happened, and the due date is not there, now it's there, now it's not there again. So this is what happened. CTA came into effect on January the 1st, 2024. BOI due day was December 31st, 2024. So at our firm, we let all of our business owners know that, oh my goodness, you have this due date, let's file, because the penalty is heavy, it's $500 a day for not filing it. But the U.S. District Court in Texas on December 3rd ordered temporary suspension, which means that, hold on, we don't want to do it, and, the due date doesn't exist. So that was like on December 3rd. So after that day, we've been telling our client that, December 31st due date is not there. Maybe you don't have to rush, And then the DOJ, the U.S. Department of Justice, on December 19, appealed the Fifth Circuit Court decision and saying that, no, your temporary suspension doesn't work. What does that do? So the Fifth Circuit Court, which is this Texas Circuit Court, and the motion panel, there's a motion panel. Don't ask me what is motion panel, but there's 2 different panels. One is motions panel, the other one is merits panel. The motions panel says that on December 23rd, lifted the suspension, goes, don't worry about it. You don't have to, let me see. So the merit court restated, right? So the motions court says that you don't need to worry. They lifted the temporary suspension, say you got to file. So on December 23rd, we turn around from the December 3rd. 20 days later, we were like eating up our own word to our clients, goes, oh, sorry, we told you that you don't have to file. There is a temporary suspension. Now that got lifted, we do have the due date again. Please do file. And then 3 days later, with the merit panel on December 26th, reinstated the suspension. So now the suspension is there again. The court is fighting, and that fight continues. So the old company that formed before 2024, they supposedly to do on the January the 1st, 2020, on the January the 1st, 2025, and need to be filed the BOI report. That due date is not there anymore. And then after they did this, they appealed the suspension. Then they give a little due date delay. So they say on January the 13th, 2025 is due. That doesn't exist anymore with this merits panel on December 26th decision. So the 2024 company, the company that formed in 2024, you have 90 days to file BOI report. That is no longer something. Right now, we are right now on December 28th. So we are on this day talking about the rules for the December 26th. So it is suspended, so there's no due date. And the 2025 and beyond, company BOI report due date supposed to be 30 days after formation. Now it's question mark. So I guess what I leave you with is just be in touch with your attorney's office, with your CPA office. If you didn't file, I would tell you just go ahead and file. Why do you have to get in between of those court fights and just do it, right? It won't hurt you, and it may be just having the government with more information about you, but that's okay, and you got nothing to hide, and why not? So don't get caught in the crossfire, and just go ahead and file BOI report, pretend it is due on January the 13th, and go from there. What do you think? So that's my number 1 point for today. Number 2 point. Number 2 is a warning. It's a warning because there's so much going on right now and in the tax court, okay? So if you have a limited partner in 2024, limited partnership filing, partner, and like how you file partnership filing and one is active, the other one is limited partners. So the limited partner don't need to pay self-employment taxes, it's pass-through income, and you get away from that 15.3% self-employment tax. That in 24 is risky to assume you are automatically exempt from self-employment tax because all of these courts. So Sarabane Capital Partners, and this is a good case, and it is in the tax court, and basically they got 5 partners in the partnership, and the court decided that the other, all of them are actually supposed to pay self-employment tax. They are not passive partners, and they are abusing the status of passive partners. So, the general story is that they 5 are all participating in company decision, but only one of them is a partner that pays self-employment tax. The other 4 don't. So the court, rejected. So they all have to pay self-employment tax. Then Denham Capital Management, same thing. That was rejected by tax court on November 2024. Very reason, right? It's fresh out of the bowl. It still smells the rice. So it tells you that this is something the IRS and the tax court is putting guidance into. You can't just call yourself passive and get away from self-employment tax. Be really careful about that. There's only one case. This kind of case is in the circuit court. That was a Ceres Solutions LLP. And then, of course, the Point 72 Asset Management Company is also set for November 24. No decision to publish yet. And I don't know whether you kind of see the trends of those capital management kind of company, because those kind of company was formed at one time to utilize this type of tax code, and saying that all the other partners and you don't need to pay self-employment tax is so beneficial, and they formed it that way. They formed in the assumption that the limited partner is a given. But this tax court is saying that no, it is not. If you participate in decision making and all of that, you are not a passive partner. Those tax court cases will establish for the practitioners, people like Community CPA, we will look at those cases and coming to conclusion for our client. If you need to pay self-employment taxes because of certain things, how you run the business, and you're running just like those companies, then we want to tell you ahead. And for you, 2024 is a hot subject at IRS, and you want to look at your LLC, making sure you're totally qualified. Of course, there's times people qualify, and I have a super good example about people qualify for the exemption of self-employment tax. But this is to say that the court decide they don't qualify to be exempted from self-employment tax. So with that said, and we want to give you a big red flag on your partnership filing. When you file 1065 and you want to exclude anybody from paying self-employment tax, and you should refer to those court cases. All right. Number 2, we want to talk about before the end of the year. The number 3, It's PTET. It's pass-through entity tax. Such a weird. I rather not have the first T, so it's become a pad, right? It's our little pad, yeah. But PTET stands for pass-through entity tax, and the pass-through entity tax is a tax. It's a tax tool. It's a tax way implemented by different state. See, hear me, by state, not the federal government, that allows the partnership and the S corporation to pay income tax at the entity level rather than passing the tax burden directly to individual owners. So, what does that mean? That just means that if you have a partnership and at the state level you need to pay taxes, and in the past you give a K-1, your partner take the K-1, file taxes on its 1040. If they need to pay, they pay them on their own, and that kind of stuff. So the PTET is implemented in the recent years by about 30-some states. And what they want to do, they want the pass-through entity to pay the state taxes at the entity level, and then the partners will take a proportion of those paid taxes to their personal tax return to get a refund back. So example, Iowa LLC, PTET is $10,000. So business expense for the partnership is $10,000. So other than other business expense, you add one more $10,000 business expense, pay taxes in partnership. Then the partner will go to their 1040, will not pay taxes on the business income anymore because it's already paid at the entity level, right? But the portion of that payment will come to K1 and go to their 1040, and the partner would get a refund back. So you got it? And if you use standard deduction on your federal taxes, you don't even pay taxes on the refund, getting it for tax-free, right? So this is it's a counter offer to the Job Act. And when Trump was the president back then, he implemented Job Act that eliminated the state tax deduction on Schedule A. So those states who actually pays income tax on the state, and really their taxpayers is suffering, not like the people live in Florida. And maybe that is the only state he looked at. That's why he did that kind of tax reform. But during his presidential campaign, he even talked about to reverse what he did because he probably realized that doesn't do any good for a lot of his supporters. But anyway, and what we are saying here is this is a side product, a result of that Job Act back then. And now we have this pass-through entity tax. I want you, before you finish 2024, to pay that in. Pay it in 2024 because I want that to be your business expense in the year of 2024. Of course, you can pay that in 2025 when you file extension. You can. It's okay. But if you do that, it's become your 2025 expense, right? Not 2024. So if you pay it right now before December 31st, you will get that into the business expense for 2024. Then you get your refund anyway for your personal. For your personal refund, you're going to get it anyway because even if you pay in 2025, it will reflect on your 2024 1040. So personal, no difference. You get refund, but for business has a little bit of difference to see where you're going to place that expense, right? All right. So that is number 3. Make sense? Let's do this. 3 days left. Before December 31st, 2024, I have 2 slides to run down things you need to do. Tax planning for 2024, there's still time left to do it. And we do tax planning all the way to the last minute of the year. Some of the plan has to be done in 2024 clock. Cannot do it outside of 2024. But there's also things can be done in 2025 for 2024. So it's not the end of the world, but do your tax planning, all right? And pay estimated taxes for 2024. To do that, and one of the things I was telling you, right? And if you pay it into the year, it becomes that year's expense, right? So you want to make sure you pay, and also not paying penalty. You want to make sure that you pay your January 15th, 2024 estimate by the end of 2024. pay property tax, pay it. I mean, if you have March payment coming in 2025, pay it in 2024. Get it over with. More deduction for you. Medical expense. You can lump sum your medical expense for a number of years on Schedule A as long as you didn't claim them, right? So you bunch them up and then you claim medical expenses. And the payroll processing for December 2024, be sure the money is coming out of your December bank balance. You know, a lot of times when we run December payroll, the money come out of in January. So if you are a cash accounting and a cash method accounting, and you won't even be able to deduct your December payroll because it didn't come out of your bank. So make sure you talk to your payroll processor and tell them that, hey, my December payroll is a little special. I'd like you to draw my fund before the end of the year. And most of the payroll processor knows about that, and they would easily do that for you. So be sure to call them. You still have time. Inventory count, so important. You want to count your inventory at the end of the year. I don't mean that you have to do that at the New Year Eve because 12 o'clock will kick in. No, you can do that a week before, a week after. But the idea is that you need to do it around this year-end time so we have a real clear of inventory you have in your storage, right? Mileage odometer reading. You know, you don't just claim mileage. Oh, I drove $35,000, 35,000 miles. IRS don't believe that. If you get audited, IRS asks you, which car do you drive? You say, this one. Do you have odometer reading for this car? Yes, I do. No, I don't. If you say, no, I don't, they look at your mileage. They go, well, I don't think you drove all of that miles in 1 year, so they can deny your mileage. So odometer reading is very important. Just take a picture on December 31st for all your cars. What's wrong with that? Just take a picture. So that way you have it in your phone, right? And a purchase money order. Why do I say that? And, you know, you got into a situation where someone, you know that you're going to pay this person $25,000 and as soon as the work is done. But the work is still not done. Now it's already 29th and just making you so anxious. And you're not sure whether, even if you write a check on December 31st to this person for $25,000 and, you know, this person don't cash, then your expenses don't go out. So in that case, you buy money orders. You buy the money order, you don't have to name who you're paying to. You just put out the dollar amount and then fill out the name and hold it. Hold it until on the December 31st, 5:30 p.m. and he finished his work, and then you give to him. Whether he deposited or not is not your problem anymore because you already draw the money out of your bank account, right? And then write checks with check date in December 2024. So if you are on accrual, you can write checks in December, even though it's not clear your bank account, that can still be counted as your expense. So in that case, when you write checks and you want to finish writing your checks in December because January come, you start writing your January check, then you suddenly remember, oh, I have one in December I'm supposed to write, I forgot. But you already passed the check series. So the December check's already used. Now you're using January. Then you write a check, you say it's December. Not logical. So what we are saying is that try to write all of your checks in the book. If you don't know the amount, and at least you write the check, leave the amount empty, and wait until you know the amount. But your accrual method accounting, you should deduct that, and once that is coming through. More. Maximize your retirement contribution. You still have December payroll. That is not done. And you could let your employer know that to maximize your retirement contribution. And retirement contribution is like water under the bridge. It goes, it doesn't come back. It's not like, oh, can I just make up all the retirement funds I didn't do, for the past few years? Because at that time I didn't have enough funds, so I didn't do. No, you can't, right? And, the maximum is $30,000, $23,000 for someone under 50, $30,000 for someone over 50. So, the maximum you can contribute is that. So make sure that you maximize your retirement contribution so you don't pay taxes on your income. Sell losing stock. Replenish them after no, I meant to write 31 days. Please, that's not the right number. 31 days. I don't want you to replenish them before 31 days because you will subject to wash sale rule if you are not a mark-to-market trader, right? So, because if you already know you have capital gain, I would want you to go ahead and sell the lost stock and then buy it back in 31 days. You think 31 days, the stock will change a lot? Maybe. A lot of time the stock market reflect on the presidential result because if you sell it right now, 31 days will ride you all the way after January the 20th when Trump swearing into White House, right? When she moved into White House. So, that could offer some possibilities. Stock market could be a little crazy. And if you are considering that, maybe when you sell, and please don't blame me if you sell, then the stock went up and you can't buy it back. But it is something to consider. Make sure that you take care of your gains, okay? You can look at your tax return, see whether you have a lot of losses already in the tax return, then you don't need to sell. But if you really do need to sell wisely, okay? Charitable donation, bundle them into 1 year, all right? So that way you can deduct more, bundle them. And take your required minimum distribution if you're over 73 years old. A lot of time, how the age thing, when we're young, our kids, babies, they are 2 years old, a big deal. 3 years old, huge deal. But, when you get into 70, 71, 72, 73, a lot of time, my client don't even remember their birthdays here. So if you turn 73, I know you have a retirement account somewhere out there. You have to do this minimum distribution. You have to take money out because your broker just don't really have that system to tell you. They may send you a letter some times ago reminding you, hey, you're 73, But if you don't draw this money, 25% of penalty. Don't let that happen. Just make sure you know your age. Okay, you're not 37, I'm sorry. You're 73. Okay, I have client, I literally said that to them. You're not 37, you're 73, you need to do RMD and distribution, or we're going to pay too much penalty. All right. Consider converting traditional IRA to Roth if your income this year is low. If you don't really make a lot of money, and you know that you're going to be not even paying taxes, I would say that convert your traditional IRA to Roth. That way, those traditional IRA become your income on your tax form, but you don't pay a lot of taxes. And I know, I wish that in the future years, you have a lot of income. That's why you want to convert. But if you tell me that, Ying, I'll make it less and less every year, then don't bother with this one. This one is to assume that you're going to make a lot more when you are older. Delay deposit income into 2024 year. So if you got a customer paid you a check on December 31st, and don't break your legs to run to the bank to deposit, no. And just delay it to January the 1st and after, and have that become your 2025 income and not 2024, right? What if you just feel uncertain, just feel not good, and feel like you're 2024 not in a good shape, not sure you're doing anything, just lost? Advice from us: do data match with Community CPA. File your 2024 return just how IRS expected you to file. That is data match. You're matching the data you submit to IRS with IRS data. Simple, right? And wait for all the documents arrive before you file taxes, kiddo. Don't just rush. And we have, I wouldn't say a lot, no. We have some clients occasionally wanting to file urgent because of the school FAFSA and all of these reasons. So they file urgent. Then later they come back, oh, I forgot a couple statement, and these are the documents that was not included. So wait for all your documents to arrive before filing. And one tips I want to give you that there is no entity that affiliated with government funding like those school, like those university. They're like government operated entity. They cannot require you to file your taxes before due date. And the real due date with extension is October 15 of 2025. So they can have an extension copy from you. They can even have a draft from you, but they have no legal right to force you to file before the due date. But of course, if you're dealing with private colleges, private is private. Private entities can do their private rules. So they can ask you for that. If you don't have, they say, we don't consider you. That's possible. But most of the universities, and they don't, force you to the corner and you have to give 2024 tax return or we don't look at your kid. They don't do that. So don't get, blindly scared, right? Understand what you can do and, don't rush filing. Work with the issues for mistakes. Work with the issuers for mistakes, and do not assume issuers know what they're doing. Yes, that is, the issuers are the people who give you the W-2, the people who give you the 1099, the people who issue 1099-K to you. Don't assume they're doing it right if you think it is not right. Trust your instinct. So those issuers are also people just like ordinary people. We all make mistakes. So if you pointed out reasons and mistakes or questions, they will answer. Then you will figure out they're doing it right. Do not file your business return without finalizing your personal return. I do not care whether your business return is a C corporation. Oh, it has nothing to do with me. No, that's not true. It has so much to do with you. And a real knowledgeable preparer will never file your 1040 without finishing your business first. So at our firm, we just don't file business return without finalizing the personal return. If our client choose not to do personal return with us, only doing business return, and we still want to see their personal return because we knew how that would impact them, so we can tell them whether the business return is ready to go or not. Pay all your tax dues when you file your taxes, whether it's extension or you file your taxes, pay all your tax bills. That is important. All right. So much about 2024, right? So I will lead you to a January 2025 consideration because there are a couple of things I want to emphasize for you because we're all business owners. You just need to know it inside out. Let's look into 2025. Let's peek into 2025. It is a year with a lot of business anxiety, okay? Uncertain government policies, uncertain labor market, right? And the government workers, are they all going to be laid off? Undocumented workers, are they all going to be deported, right? Uncertain tariff tax, are we going to raise 60% on Chinese goods and 20% on everybody else? Inflation, for sure inflation, if all of this stuff is become certainty. So 2025 is really a maze. Right now, we are set to go into it, but let's see what we find out. But the importance of 2025 is you need to know that if you never do tax planning in the past, but you are with Community CPA and you know us, 2025 is the year that you should do. Very important because you want to do it starting from October all the way to December, this last quarter time, you want to do because by then policy should be more settling. We should know what government is doing and the things will get more clear for all the business owners. Stay in touch with us and subscribe to our channel on YouTube then you will know what's going on. We teach you what's going on. So during the first 10 days of January, I want you to do these checklists, okay? And I want you to close your financial statement for 2024. Be sure to know how to generate income statement, balance sheet, cash flow statement, because you will need it. You need that for your tax preparer. So make sure you review all your transactions, reconcile your balance sheet account, not just your bank, also your receivable, okay? Also your payable, and prepare any necessary adjusting entries and with notes. So that way you know why you make the adjusting entries. So that's a key accounting consideration. Inventory management. This is year-end inventory. Year-end inventory, we mentioned that earlier on the checklist. This is again, you want to know your year-end inventory count. You want to do evaluation of your inventory. When I say evaluation, I'm not talking about for you to hire somebody professional to come in to do evaluation. It's not necessary every year. But this evaluation would help you to implement your accounting policy. For example, some of those obsolete inventory need to be writing off, and then you write them off. So all of these treatment will come in at the end of the year, right? So remember what I always say. The higher the inventory you have, the more taxes you pay. You probably goes, no, Ying, that has to be wrong. I spend money to buy inventory and I have to pay more taxes? Absolutely. Absolutely. Because inventory is not your expense. Inventory is just another form of your bank deposit. You just turn your bank balance into things and on your balance sheet. So inventory higher just means that you did not have the expense. You need to reduce your inventory so you have expense on your income statement. Make sense, right? And that expense is called cost of goods sold. All right, fixed asset, very, very important. At the end of the year, you want to update your fixed asset. Some of those fixed assets, even though still running values, running depreciation on your book, but you already kick it away. You already throw it away. You already dump that in the storage room. So really counting your fixed asset, updating your record, and calculating depreciation amortization. This is what we do when we do tax planning for you at the end of the year. Like right now, we're doing 2024. We always calculate depreciation amortization for our client so we know how much expenses they would reduce out of their profit, right? And then the other thing, within the 10 days of January, you want to work with your wealth management people. Whether it is our wealth division, you work with Crystal, or you are actually working with your financial planner, but you want to review your portfolio. By then, you already know the result of December. It is such a good time to reset the dial and knows what you're going to do. And also, for 2024, there's contribution available, like the 25% of company contribution. That's available to 401k qualified employees and solo 401k business owners. So there are a lot of things here can still happen for 2024. So you work with your wealth division people, and you're going to look at your future investment, strategize that, and then you're going to look to see what else can go into 2024 to reduce your taxable income. The last but not least is your living trust update. You can't be forming a living trust and just sleep on it. No, you need to think about it, updating it. Normally, if you have a living trust with us, and we actually combining that into your year-end tax planning, we update that at that time. Just in case you got a new baby, or you got a new cat. I'm just kidding. So whatever happened in your life and really need to be reflected on the trust that you already formed, right? And unless you don't set it up, if you set it up, you need to know that is your at least, if it is not annually, at least several years, you need to update it. You cannot just leave it without updating your life content, right? So with that said, we conclude today's talk. And we did from the beginning. BOI is a big thing, really. Make sure that you just get that filed. Don't get involved with the court struggles. Don't get caught in the crossfire, and just do it, right? And then that's the BOI. And then you also have the limited partnership battles right now in the tax court is very hot potatoes. And just don't get that into your own hand. And be looking at your own filing, make sure you are okay with the limited partner designation. Then, of course, pass-through entity tax, right? We explained that you should pay it. If you pay it in 2024, it's more benefit than you pay it when you file extension. That's okay too. And then we talked about all this small list of things that we need to do in 2024 before December 31st, 12 p.m. That magic moment, and you can get that all done. But from January the 1st to January the 10th, we also talk about things you need to do. So these are the last few slides. And so to look at your financial for 2024, to look at your wealth side of planning and strategic, and to look at your inventory, look at your asset, all of these things. So, and your living trust. With that all said, I want to lead you back to our partner list, and you can have us be yours advisor and when you contact us. And the tax planning strategy, tax planning service is our thing. And don't you see in our name, the tax planning is just part of us. And we actually have a really good format of helping you. We didn't buy template, we didn't pay somebody else, and we developed your tax planning tools, and we fit all of your business on 8x11. No more than that. And we don't want to give you a book to prove our value. Our value is in simplicity. That is the tremendous value. And any CPA firm can give to their client simplicity. And that's what we do. We summarize your whole life on 8x11, even if you have 58 companies. All right. This is our YouTube channel, and subscribe to our channel. And you have our website right there, www.communitycpa.com. And you can call us 515-288-3188 6 days a week, Monday to Saturday, from 8:30 to 5:30 Central Standard Time. And we will talk to you again. And this will be our last Saturday session with you before we heading over to 2025. Happy New Year to all of you, and looking forward to our New Year message to you. All right. Bye-bye. Have a great New Year. Prosper business.